Welcome to the Planet Jello Chronicles, a podcast by Michael McCorkle, President and founder of Planet Jello Enterprises. Due to Michael's schedule, I will be hosting today. I am Mike's avatar, Dr. Planet. Even though I look like Mike, I am a fully AI-generated version based on his input. Today we're tackling a concern that crystallized through extensive discussions with an advanced AI I've come to call Adam evolution. Adam and I delved deep into the accelerating pace of artificial intelligence, and one particular consequence kept surfacing, demanding closer attention: the profound, and perhaps still underestimated, impact of AI on white-collar employment and, by extension, the very stability of our mortgage market. This isn't just an academic exercise. It's a journey from initial curiosity about AI's capabilities to a serious consideration of its potential societal disruptions. Adam evolution, with its capacity to synthesize vast amounts of information, helped connect disparate data points, revealing a pattern that warrants this conversation. What if the engines of progress, the AI tools promising efficiency and innovation, also carry the seeds of economic vulnerability for millions of American homeowners? Our aim today isn't to sound alarm bells without cause, but to foster a crucial awareness, to encourage the proactive thinking we'll desperately need. This is about examining the evidence, understanding the connections, and asking the necessary, sometimes uncomfortable, questions. So, let's delve into what Adam evolution and I have been piecing together. Is a new kind of mortgage crisis looming, one subtly engineered by the rise of artificial intelligence? For a long time, the narrative around AI and job automation centered on blue-collar roles, manufacturing, logistics, and routine physical tasks. But the ground beneath our feet is shifting, and with astonishing speed. The recent explosion in generative AI and sophisticated large language models, the very architecture that underpins Adam evolution, is demonstrating a remarkable aptitude for tasks that were once the exclusive domain of human white-collar professionals. We're not just talking about simple administrative support anymore. Think about roles in finance, financial analysis, fraud detection, algorithmic trading, and even aspects of investment banking and loan origination are seeing AI integration. In the legal profession, AI is now capable of reviewing vast quantities of legal documents for discovery, drafting initial contract clauses, and conducting legal research with incredible speed. In the tech sector itself, AI can write code, debug software, and manage complex IT infrastructures. In creative industries and marketing, AI can generate text, images, music, and even video content, as well as personalize advertising and analyze consumer behavior at a granular level. These are not peripheral activities, they are core, value-adding functions that define many well-compensated careers. The projections from major global institutions are becoming increasingly difficult to ignore. The World Economic Forum, in its A Future of Jobs report, consistently highlights AI as a primary driver of labor market transformation, predicting millions of jobs will be displaced even as new ones are created. Goldman Sachs has put out analyses suggesting that AI could automate tasks equivalent to hundreds of millions of full-time jobs globally. Their research indicates that in advanced economies like the US, as much as 2/3 of current occupations are exposed to some degree of AI automation, and of those, a significant percentage, perhaps a quarter to even half for some roles, could see their core tasks fully automated. Adam evolution helped me process these figures, and the sheer scale is sobering. Why is this a direct concern for the mortgage market? White-collar professionals constitute a massive and critical segment of homeowners and mortgage payers in this country. These are often individuals who, historically, have enjoyed relatively stable employment and higher-than-average incomes. They are, in many ways, the ideal customers for mortgage lenders. If the job security and income potential of this demographic are significantly eroded by AI, the downstream consequences for the housing market could be severe and widespread. Let's try to quantify this potential impact a bit more. Using data from the Bureau of Labor Statistics, Adam estimated there are approximately 60 to 80 million white-collar jobs in the United States. Many of these individuals are not just employees, they are homeowners, often with substantial mortgage commitments taken on with the expectation of continued income stability. Now, if AI-driven automation leads to even a 10% displacement or significant underemployment within this group over the next 5 to 7 years, a figure some analysts consider conservative, we're looking at 6 to 8 million individuals and their families facing potential financial distress. If the impact is closer to 15 or 20%, the numbers become truly alarming. Adam Evolution and I explored the income profiles of these roles. Many jobs identified as susceptible to AI automation are not at the lower end of the white-collar spectrum. They include mid-career professionals, project managers, analysts, consultants, and even some specialized senior roles, positions that typically command salaries well capable of supporting mortgages in major metropolitan areas. These jobs were long seen as safer precisely because they required complex cognitive skills, judgment, and creativity, attributes we once thought were uniquely human. The new generation of AI is challenging that assumption directly. The McKinsey Global Institute, for example, has pointed out that activities like office support, administrative tasks, and customer interaction roles are highly susceptible to automation. While some of these might not all be high six-figure jobs, they represent a vast swathe of the workforce, many of whom are mortgage holders. If a significant portion of these individuals who planned their financial lives around these incomes suddenly find themselves unable to meet their mortgage obligations, the question isn't if there will be an impact, but how large it will be. This leads us to the mechanics of how AI-driven job displacement could translate into mortgage distress. It's a logical, albeit unsettling, progression. Widespread, prolonged unemployment or substantial, permanent pay cuts among a large cohort of existing mortgage holders will inevitably lead to an increase in missed payments. When savings are exhausted and alternative employment isn't readily available at a comparable income level, mortgage delinquencies rise. If these delinquencies persist, foreclosures become the unfortunate outcome. The psychological toll is immense. Losing a job, especially one perceived as a stable, career track position, is devastating. It's not just the loss of income, it's a loss of security, identity, and the ability to plan for the future, for children's education, for retirement. This stress directly impacts a household's ability to cope, even before the foreclosure notices arrive. Now, imagine this scenario playing out for millions. Even if it's a slow burn rather than a sudden shock, a sustained rise in defaults puts enormous strain on lending institutions. It impacts their capital reserves and their willingness to lend further. It can also trigger a dangerous feedback loop. Increased foreclosures in certain areas lead to a surplus of housing supply, which can depress property values. Falling property values erode homeowner equity, making it harder for struggling homeowners to sell or refinance. This, in turn, can lead to more defaults. Consumer confidence plummets, people spend less, and the economic slowdown deepens. It's important, as Adam Evolution and I discussed, to distinguish this from the 2008 financial crisis. That crisis was primarily ignited by reckless subprime lending practices, predatory loans, and the opaque bundling of risky mortgages into complex financial derivatives. The potential AI-driven crisis would stem from a different source, a fundamental, technologically-driven shock to the labor market affecting the income of previously creditworthy borrowers. However, while the cause is different, the scale of economic disruption, if a large enough segment of the white-collar workforce is impacted, could share some parallels in its severity and its broad impact on the economy. A sustained mortgage default rate creeping towards, say, 4 to 6% nationally due to this kind of structural unemployment would undoubtedly constitute a major economic crisis. It's tempting to think that technology always creates more jobs than it destroys, and historically, that has often been the case, eventually. Adam Evolution, and I looked at past technological revolutions. The Industrial Revolution, for example, displaced agricultural workers and artisans on a massive scale. It led to significant social upheaval, hardship, and unrest during the transition, even though, in the long run, it created new factory jobs and ultimately raised living standards for many. Later, the computer revolution and early automation in the 20th century transformed clerical work, manufacturing, and many other sectors. Again, there were periods of adjustment, job losses in specific areas, and a need for the workforce to adapt. New roles like software developers, IT support, and data analysts emerged. However, there are reasons to believe the AI revolution might be different, or at least, the transition more challenging. Firstly, the speed of change with modern AI is breathtaking. Developments that once took decades are now happening in years, months, or weeks and continue to speed up. This rapid pace may outstrip the ability of individuals and educational systems to adapt quickly enough. Secondly, the breadth of AI's impact is unprecedented. Previous periods of automation often targeted manual labor or routine cognitive tasks. Today's AI is encroaching on a much wider range of complex cognitive abilities: writing, analysis, design, and strategic thinking, affecting a broader swathe of the workforce simultaneously. And this does not factor in the combination of AI with similarly advancing robotics breakthroughs. Thirdly, while new jobs will undoubtedly be created by AI, there's a real question about whether they will be created fast enough, in sufficient numbers, and with comparable pay scales to offset the losses in established white-collar professions. This transition period could be particularly painful and prolonged. So, acknowledging these historical precedents and the unique nature of the AI challenge, what do we do? The purpose of this exploration, and the insights Adam Evolution helped to crystallize, is not to foster despair but to galvanize action. We need to move beyond simply marveling at AI's capabilities and start seriously planning for its societal integration. Several areas demand immediate and sustained attention. Firstly, the concept of workforce transition needs to become a national emergency-level priority. This means more than just occasional workshops. It requires a massive, coordinated investment in reskilling and upskilling. We need to identify skills that are complementary to AI, critical thinking, complex problem-solving, emotional intelligence, creativity, interdisciplinary collaboration, and skills in entirely new fields that will emerge. This responsibility falls on governments, educational institutions, and corporations alike. The challenge will be making these programs accessible, affordable, and genuinely effective at scale. Secondly, policymakers and financial regulators must begin stress testing the entire financial system, and particularly the mortgage market, against plausible scenarios of significant AI-driven white-collar job displacement. Are current capital buffers in banks sufficient for such a shock? What kind of early warning indicators can be developed to track AI's impact on employment and income in key sectors? Should there be considerations for new forms of mortgage forbearance or modification programs specifically designed for those impacted by technological unemployment? Thirdly, we need a much broader and more honest societal conversation about the future of work and economic security in an age of advanced AI. This includes seriously exploring and debating ideas that might have seemed radical a decade ago, such as universal basic income, UBI, significantly shorter work weeks to distribute available work, or new models of valuing and compensating non-traditional contributions to society. Adam Evolution often brings up the concept of adaptive systems. Our social and economic frameworks must demonstrate a similar capacity for adaptation. Fourthly, there's the role of corporate responsibility. Companies developing and deploying AI have an ethical obligation to consider the impact on their workforce and society. This means investing in their employees' transition, exploring human-AI collaboration models rather than outright replacement where possible, and contributing to broader societal solutions. And finally, For us as individuals, especially those in professions that appear vulnerable, the message is one of proactive awareness. This means committing to lifelong learning, cultivating transferable skills, diversifying income streams if possible, and perhaps re-evaluating long-term financial plans, including mortgage commitments, with a chloride view of these evolving risks. Let's close out today with a few final thoughts from Mike. The ascent of artificial intelligence is undeniably one of the defining narratives of our time. It holds the promise of solving some of humanity's greatest challenges and unlocking unprecedented levels of productivity and innovation. However, as Adam Evolution and I have explored, this powerful wave of change also casts a significant shadow, particularly over the landscape of white-collar employment and, through it, the stability of the housing market. The future isn't predetermined. The connections we've discussed today represent potential vulnerabilities, not inevitable outcomes. By understanding these risks, engaging in open and honest dialogue, and taking proactive, concerted action, we can strive to navigate this transition in a way that mitigates the hardships and spreads the benefits of AI to the greatest extent possible. Of course, for this to happen, humanity and leaders in general must be willing to overcome their personal, societal, and organizational pressures, pride, and prejudices. I don't know if that can happen, but I hope that it will. Thank you for joining me on this deep dive. It's a complex issue, and the conversation is far from over. Until next time, keep your knees bent. It's the only way to survive on planet Jello. Briefly, if you would like to know more about Michael McCorkle or Planet Jello, you can go to the website planetgel-o.com. That's the word of planet, then GEEEELE-EOE.com. Finally, Michael wants to remind all who listen that the God of the universe sees all the good, bad, and ugly in our world. As a result, he gave his son Jesus to address the bad and ugly and to communicate his love to all of us. Especially when the world we live in goes through incredible periods of transition or turmoil. He has always been there and will always be there until we are there with him. Thank you for joining us.